Bazaar Morning Call, live from the CNBC-TV18 headquarters in Mumbai.
Good morning. Welcome to Bazaar Morning Call. I'm Lata, with me Anuj and Sonia. As always, the screen, Wall Street indices and the Indian indices have been dithering at heights. It's some fear of heights as they approach all-time high levels. Today, Asia looked like it would follow US, but in the past few minutes, so to speak, past half hour, Asia has picked up, and there's a decent amount of green on the Asian screen, especially on Hang Seng, as you can see, an index that we sometimes track as we do Kospi, all of them a little bit in the green. But the difference to be fair, there is a fair amount of FII money, and that's pouring into both Asia and India. It may be a little less than what it was last week, but it is continuing. The only headwind, perhaps, which is different for India would be the way in which crude has risen. As it approaches 70, 69, 73 when I last checked, that is a bit of a bother. It's basically a fuel for all Indian manufacturing. So irrespective of whether it is affecting oil marketing companies, it is going to be an expensive raw material, and we may see some reaction to that. That's an added reason why you may want to hesitate as you approach all-time highs. But to counter it, I think a bigger reason why people may want to be bullish or biddish would be tomorrow's monetary policy, widely expected to be a dovish one. People are largely going with the 25 basis cut, but I wouldn't be surprised if there are more dovish noises than just a 25 basis cut. I mean, you can't rule out a 50 basis cut, nor would you rule out a change in stance to accommodative. So I don't think too much of profit taking will be done ahead of such an important event, which is expected to be market positive.
Okay, Lata, hi, morning, Anuj, morning. I guess Brent at $70 a barrel is the big worry, and maybe the reason why India has not played catch up to emerging markets and Asia ex-Japan just yet. I mean, if you look at what's happened year to date, India is up about, the MSCI India index is up 8.5%, while MSCI EM and Asia ex-Japan are up about 11.5 to 13%. So there is that bit of catch up that has taken place, but not entirely, maybe because of, the way crude is shaping up and that election uncertainty. Anuj, morning. We, of course, have been patient, and maybe we jinxed it yesterday and day before, expecting the all-time highs to come through. But what is the expectation for today?
Sonia, good morning. Look, the market's been on a tear, frankly. It's just 2-3 days of consolidation. I think we forget that last month we outperformed the Asia, ex-Japan and emerging market peer, the MSCI index, by good 8%. So my base case remains that we hit perhaps all-time high tomorrow. In fact, I could be wrong here, but I have a premonition of, 50 basis point rate cut from the RBI.
You're not alone.
And the market seeing a bit of a deja vu in the sense that big rush, everyone trying to buy, and then the smart money which has been buying quite, for last 1,000 points, booking some profits. These things sometimes happen like that. My premise right now is, after this big rally, there's time to place some hedges in your positions. You should not be shorting this market. You should be long on this market, but with some hedges, because you don't want to play for that last 200, 300 points if it turns out to be the last 200, 300 points. So the Nifty has unfinished business. It should hit new all-time high today, perhaps. If not today, then for sure, perhaps tomorrow. And like Lata said, the market's unlikely to fall big ahead of tomorrow's monetary policy. And one thing, you should not short dull market. Yesterday at 2:30, the market was looking dull, and then all of a sudden, intraday, the Bank Nifty moved up 150 points. The Nifty moved up intraday about 50 points. But the point we've been making for some time now, there's some catch-up happening. Nifty 50 and Nifty IT catching up with Bank Nifty. Yesterday also, the IT index was up 0.9%, the Bank Nifty was flat. And for last 3 days now, the IT index is up 4.4% and the Bank Nifty is up 1%. Now, I am not saying that this is a trend reversal. This is just some bit of catch-up, some bit of cyclical play, or some bit of perhaps a strategic play at work. For the index to hit new all-time high, you will need support from banks and you will need support from Reliance. That will also happen. The FI data is also bullish, both in cash and in F&O. So the market will give you dips and consolidation like it did yesterday, and that would be the time to buy. But as I said, ahead of tomorrow's policy, perhaps it's time to get some hedges in place. Also, when you go into a big event, you ask yourself, what has the market priced in? What could be the negative surprise? What could be the positive surprise? When we go into tomorrow's monetary policy, I think with the kind of market rally that we have had, we will not be in a position where we can say even a 50 basis point rate cut will be any kind of positive surprise. So, market is baking in a lot of good news at these prices.
Yeah, I would have gone on with this 50 basis, or at least a very, very dovish policy. It's just that crude is now at 70. And always the event which is just penultimate to the Monetary Policy Committee's discussions kind of preys on the MPC's mind. So while even if the governor and Ravindra Dholakia are, emboldened to go 50 basis, I don't know how many of the others will go with him. And I don't know for a 50 basis whether the governor will be willing to use his casting vote. And that is the only reason why I think 50 is a bit of a tall ask. Something similar can be achieved even by liquidity, which is in your hands. You can release it when you wish and thereby lower rates. That's the only reason why I think maybe 25 and not 50.
Okay, well, the other big thing that took place yesterday was that Supreme Court judgment on the Feb 12th circular, the RBI circular. We have now about 24 hours to pass through that judgment. What are the key takeaways from a, say, market standpoint?
Okay, well, that's not much actually. The short answer for that is it's not much. What were the key takeaways of the IBC from a market standpoint? It just improves borrower behavior. And now that, that whip you had against borrowers has become slightly softer. So it's actually the ground terrain that changes, not individual stocks. But just to cut a long story short, there is the court judgment, if you read, it finds fault with only one clause in the entire FEPTEL circular. That is, RBI cannot force banks to take cases to IBC. That power it has only because of special dispensation given by the government. Okay. But everything else, the circular said that on the day of due date, borrowers have to pay. That is the meaning of one-day default. That's what you do in the bond market, right? In bonds, if you don't pay the interest on the due date, you are marked default. They were trying to get the same discipline into the bank market as well. On the due date, you have to pay up. If you don't, banks have to report it to the CRILIC, the central database, and then bankers know who is the person who is stressed. So you can't play one bank against the other. And therefore, you saw a lot of these SMA2, SMA1 cases, which is, you are 60-day overdue, 85 days overdue, all that coming down. Banks also got money immediately, in the sense a person could not sit, a lot of companies would have the money to pay the interest. But anyway, you're not NPA till you reach 90 days. Yeah. So you earn money market interest for 85 days and then pass it on to the banks. Those kinds of advantages for the banks goes away. So now what does the RBI do? There are two courses according to the sources I spoke to in legal circles. One, it can go back to the court and say, you have a problem only with this. So can we deduct that and give you this circular? Are you okay with it? Or they may avoid that altogether and rewrite a new circular, including what I would think are the positive parts of the circular, like ensuring that the moment default happens, you intimate to the CRILIC and bankers become aware of who is stressed. And that just keeps borrowers kind of on their toes. So now we have to see what course the bankers take. As far as banks' P&L is concerned, I don't think anything changes. Will banks not take cases to IBC? I spoke to a bunch of bankers and they all said, even if the FEP 12 circular is not there, we are finding out-of-court settlements very difficult to come by. We might as well push all those power cases, which SBI was trying. They're sick and tired of trying to get out-of-court settlements. So I think on that note, let us hear the chairman himself, SBI chairman Rajneesh Kumar.
One is that banks had already put a resolution framework under bank-led resolution approach, where that system has already started functioning. Second is that Supreme Court has upheld the constitutional validity of IBC in their previous judgments. So the intent to bring discipline in the lending and borrowing markets, that is not getting diluted in any manner. And that is what, as lenders, or at least I can speak on behalf of the State Bank of India, our approach to the resolution of stressed assets, which is a proactive approach recognize early the asset and take corrective action. So there will be no change in that. And the discipline which has come in the markets around payment, I don't think that is going to be diluted in any manner.
Okay, that's the word coming in from the SBI chairman. But let's move on. Now we have a market to trade, and in all likelihood today the SGX Nifty is indicating that the start will be a bit flat. But here's a look at what our wise experts have to say as we head into trade this morning. Bijay Kumar of Deutsche Bank says in the backdrop of a seasonally soft quarter for economic activity, expected easing in domestic and external monetary policies and reduced political risk, they expect the buyers to be in favor of quality, growth and large caps before the election. Broader market valuations remain high versus historical trading range on earnings-based valuation multiples. Some of the preferred stocks in their coverage universe is likely to outperform pre-election results. These stocks include Axis Bank, ICICI Bank, Titan, Asian Paints and Reliance Industries. So a lot of market leaders in that list.
Yeah, the same old bets, actually.
Yeah.
Well, money market views coming from Pramit Brahmavat of Veracity. Pramit says he expects an indecisive move in the rupee. Trading range for the spot USD INR would be between 68.80 and 69.20.
And on the bonds, Dhaval Dalal of Edelweiss says they see underlying bullishness in bonds ahead of the MPC meeting later this week. Edelweiss expects an 80% chance of a 25 basis points cut in the repo rate and a 20% chance of a 50 basis points cut in the repo rate by the MPC. They remain bullish and expect the 10-year bond yield to trend towards 7% in the medium term.
Okay, Asian markets are picking up because of fresh developments or news of perhaps fresh likely developments between US and China. That's why the Asian markets are actually up despite the US market yesterday going down. Here's Mangalam with the world view.
Well, the Wall Street yesterday, the Dow snapped a 3-day winning streak, down about 80 points. The S&P absolutely flat, while the Nasdaq was higher by about 0.25%. What took Dow lower? It was Walgreens that impacted Wall Street. Weaker than expected earnings. Walgreens, remember, the drugstore has about 1.5% weight on the Dow and was down by about 13%. But Delta, the Atlanta-based airline, higher by about 6% yesterday as the company hiked their earnings estimates for the first quarter CY19. Earnings estimates for the first quarter for S&P 500 are expected to decline by about 4%. That's what the data coming in from FactSet says. And remember, over the last 5 quarters, Wall Street earnings have increased by double digits. So maybe some pullback is what the street is working with in the first quarter. In light of that, good guidance coming in from Delta takes the stock higher. Across the Atlantic, good moves coming in from the European markets. All the frontline indices rising on better data coming from US and China, unperturbed by Brexit chaos, and weak data coming in from UK, where the construction activity for March slowed down for the second straight month. Coming to the Asian markets now, they've gathered steam as there is fresh optimism over US-China trade talks. In fact, the Nikkei is now higher by about 0.75%, the Hang Seng by about 0.8%. But keep an eye out on crude. From the start of this year, Brent crude has risen by about 36%. It's approaching that $70 per barrel mark, which is why perhaps the SGX Nifty, while it is in the green, is underperforming the other Asian peers.
Well, thank you very much, Mangalam, for that very helpful wrap. Yes, the fly in the ointment, as you point out, is the rise in crude prices hitting fresh 2019 highs, more because of buzz of sanctions against Iran, further Venezuelan disruptions, and of course more OPEC-led supply cuts. Jonathan Barrett, the CIO of Probus Securities, joins us on the phone line to give us his take on whether crude is headed above 70 or whether the crude also will dither at heights. Good morning, Jonathan. Thank you very much for joining us. Well, that's actually the first question. What's your range? What's the average likely to be over the next 1 month?
Yes, good morning. Look, it has been quite a big move, particularly as we broke out of critical resistance. In fact, we broke out of the range we've been in for about 3 to 4 months. So with this move, we move up to a higher range. When we look at the Brent contract...
Jonathan, we really can't hear you very well. So what we're going to do is we're going to try and get you back on the phone line once again with a bit more clarity on the, on the audio. For now, we're going to get you some views from the IMF chief, Christine Lagarde, who's warned that the majority of countries around the world can expect slower growth in 2019 as the global economy has lost quite a bit of momentum. Speaking to CNBC's Sarah Eason, she talks about the key risks and why this is a very delicate moment for economies worldwide. Listen in.
The growth is losing momentum, and it is losing the momentum that we had hoped for pretty much across the globe. We have 70% of the global economy that is slowing down. So compared with previous forecast, it's clearly going to be a little bit downgraded. I think added to that, there are signs of hope coming up. So we forecast that 2019, second half, early 2020 should be better placed. Unless trade tensions go away, and go away for good and across the board, which would then clearly boost confidence, which would clearly encourage investment. We are very concerned about this very delicate moment where policies are needed on all fronts. If there was a 25% tariff increase on all trade between the two countries, US and China, and there is a clear negative impact, minus 0.6% on the US economy, minus 1.5% on the Chinese economy. So given that those are the two big giants currently, if you have that kind of negative impact on both, it would weigh heavily on the global economy and would be bad.
Okay, but if it is an economic slowdown, then crude should also slow down, shouldn't it? Jonathan Barrett, good morning again. If you can hear me now, we had a problem with your audio. What's your sense about which way crude is headed and what could be the average for the next 1 month?
Sure. Good morning. Hopefully this is a little bit clearer. Look, it has broken up through significant resistance. When I look at the WTI contract, I can see 72.50. When I look at the reasons for it to get to them, they haven't changed. So at the moment, we've got to assume a bullish stance for the commodity.
Okay. Jonathan, good morning. There has been a significant inventory built up in the US markets, though, but the crude market has just not reacted to that. Do you think it's going to play catch up?
Look, the reason the crude market hasn't reacted to it, I feel, is the fact that we've got a blackout in Venezuela, which I think is a concern. And the news that Saudi Arabia had cut more supply than what was agreed at OPEC, in my mind, sent more of a shiver through the market. If that build in the US becomes more of a trend, then that might placate the market and we might put a brake on it. But at the moment, I feel that given a positive outcome on trade talks, you get a sense that some of these commodities are going to have a run to the top side. And that's my fear at the moment.
Okay. Jonathan, did I hear you right? You expect 72 in WTI?
No, 72 in Brent.
Brent, all right. That's a relief. Thank you very much, Jonathan. Thank you very much for joining us with your thoughts in the morning. Okay, 72 is perhaps, I mean, we've seen worse, so it's not, I would worry only if it was WTI.
That was a bit of an early morning scare, was it not? But yeah, he says that given the positive outlook on trade talks globally, crude could perhaps move up higher in the near term.